Hey everyone, and thanks for jumping back into the cryptoverse. Today we're going to talk about Bitcoin, and we're just going to be looking at the fact that we are now below the 20-day moving average. If you guys like the content, please subscribe to the channel, give the video a thumbs up. Also, check out the Telegram channel, which you can find a link to in the description below. Let's go ahead and jump in. So, as we've mentioned before, the 20-day moving average is not that significant. And you might say, well, why even have a video on it? But the point is to say when we hold it, as we've said before, when we hold it, we tend to bounce relatively quickly. So if you look here, this chart shows the 20-day, which is the orange line, and the pink line, which is the 21-day EMA. So it's the same thing that we have for our weekly candle or our weekly bull market support, but this is on, in fact, the daily time frame. Okay, this is the daily time frame. This is the weekly time frame. Now, this can be a good indication of, say, short-term support. We talked about this briefly when we had the rally earlier on to close to 20K. We came down to the 20-day moving average. We discussed then that if we held it, we can see a quick bounce, and that's exactly what happened. But the reverse of going below it does not necessarily mean we're heading down. And what I mean by that is just because you break below the 20-day moving average, historically speaking, does not definitively mean that you will break down to, say, the 20-week moving average, which is much lower down. We know that right now the 20-week moving average is at 19,500 and the 21-week EMA is around $22,000. So this is a lot further down. Obviously, if we were to correct, then these would continue moving up. So hopefully we would come to meet them somewhere in between, depending on how long it took that correction to take. But the point is to say, we've seen this type of stuff before where we had a bounce off the 20-day, back up, and then ultimately we came back down below the 20-day and then basically sat on the 21-day EMA with some candles above it and maybe even some slightly below it. So we've seen this type of stuff before, and it was still able to bounce. Okay, so the point is to say, of course, there is always, and I mean always, we always have to consider the downside risk in crypto. None of this is financial advice, but you're not doing yourself any favors if you don't consider at least the downside risk. We all want Bitcoin to ultimately trend up, but we always have to consider the short-term downside risk, especially if you're following the market every single day, and you're watching things very, very closely. It can be scary during a bull market when things actually do correct in a sustainable way, meaning we actually trend down over several weeks, not just a couple weeks. Okay, so of course this is always, at the very least, this is the downside risk in a bull market, because of course we know that it's also possible to theoretically break it. We discussed this bull market support band and how it provided support last cycle several times. In fact, many times it provided us with support, and those support ranges, when from the peak down to it, could be upwards of 40%, a 40% loss. And so far this cycle, we've had a correction to the 20-week moving average and the 21-week EMA. It was right here from the top. From the local top, it was a 20% correction. So we've already had one correction down to the 20-week moving average. And what we said back then was that if we hold support, our market sentiment can change on a dime. And look how quickly the sentiment changed in Bitcoin. It changed so quickly. Everyone remembers the Gap boys that were screaming that we have to go fill the gap at $9,600. We said no. This is, while it could happen, of course, we're not going to discount anything. We said we're not going to discount anything. Back then we said that. But is it worth the risk of not owning Bitcoin on the idea that it has to fill a gap because it historically fills gaps? However, we haven't really had that. We haven't really been in through a full bull market with this in the first place. So how do we know this has to happen? And this is what we said, right? You don't want to necessarily consider that it has to fill in order to buy that Bitcoin. And one of our arguments was, Bitcoin was at 10K for several weeks, and we said, it would be somewhat poetic if the last time that Bitcoin visits 10K are just wicks slightly below it. And we had 2 wicks on weekly candles that went slightly below it. I believe if you look at daily candles, we had maybe around 6 days or so that could theoretically be the last opportunity to buy Bitcoin below 10K. I mean, I imagine a lot of people would believe that to be true at this point. Of course, anything's possible, but 10K is certainly a long ways away now. So now we're looking at the market and we're saying, well, the bull market support band has moved up considerably. And we're looking at the 20-day and the 21-day EMA. So the 20-day SMA and the 21-day EMA. And you can see that the price of Bitcoin tried to hold the 20-day for several days. We were just above it. However, over the last couple days, we in fact have moved below it. So the thesis that we've said before is that if we had held it, right, if we were able to continue holding it, then typically we're able to get a nice short-term bounce. Okay, we've seen this before. However, we have not held it, but as we also said, that does not necessarily mean that it has to trend down. Okay, we've seen this many times before. It's just that when things are very bullish, we'll show a few examples. When things are very bullish and you hold the 20-day like it did here, you can see a nice short-term bounce. There's been plenty of examples. Here's another one. Holding the 20-day and then you see a nice short-term bounce. But not holding it does not necessarily mean it's heading back down to the depths of despair. It just means it's not going to experience that immediate short-term bounce back up. Okay, so that's essentially what it likely means. And as we've broken down below it, and now this is our second day of trending down. So what we want to consider now, as always, we're pragmatic here. We're not here to say that it's going to go up monotonically, though it has seemingly done that for months. But we're not here to say that Bitcoin will go up monotonically. We like to take more of a pragmatic approach to the market and just be aware of what the downside risk is, because at the end of the day, no one really knows what's going to happen in the short term. As we've said many times on the channel, it's more or less a random walk, geometric Brownian motion, not something that we can reasonably predict in the short term, right? It's just simply not something that we can reasonably predict. I mean, of course, you'll see that we are putting in lower highs, right? Lower highs at around 42K, and then we came down to around 40K, and then now we're down at 38K. I mean, even if we hold the 21-day, it's possible we come straight back up to it. And if we did, it would correspond to maybe around 36.5, 36.5K or so, if this trend were to continue. So the purpose of these videos are just to always keep us grounded in the market. I contend that this cycle will be a long cycle, and we want to follow it every step of the way. So if we do start breaking down below it, which again there's no guarantee that we would, but if we did, the point would be to say, okay, where would our first major line of defense be? Okay, where would it be? Well, obviously the first major line of defense, as we showed a few days ago, would probably be 30K. We had a wick down to 30K. I imagine that would at least try to hold as support in the event of a correction. If we fall below that, what I would be looking for, if we were to fall below that, I would be looking at this band here in order for us to hold the line to, as we've said before, to maintain the integrity of the bull market. We always discuss where it is, even when we were over here and trending higher. We constantly discussed where it was, and it helped us prepare for that correction back down to it. And the point of these videos, again, it's to not be just bearish or anything like that. It's just say, you know what, we always have to consider the downside risk every step of the way. That way, everyone can make a decision on what they're doing in the market based on what the upside risk is, or the upside potential, and the downside risk. So that's ultimately the point of these videos, is to just always keep our heads not just all way off in space somewhere thinking it has to go up forever. So we'll see. We'll see if this trend back down continues, or not, or if we can break out and put in higher highs. One of the things too that we've looked at before. Let's remove all this, and we're just going to take the bar pattern from the bottom of the last cycle again. So this was something we did a little while ago, and we're just going to measure it out, and then we're going to overlay it to say the bottom over here. And you can see that, I guess we should probably line this up a little bit better from the capitulation, maybe like right in there. I don't really know exactly the best way to draw it. Something like that. We've had, no matter where you draw it, you can see that the last cycle had its fair share of corrections. And arguably, this move that we've had in this cycle has been nothing short of spectacular, considering that it's moved up around 4x in about 4 months, right? 4x in 4 months. For Bitcoin, obviously, it's back down to 34,000, but it was 10K back at the end of September. Early October, Bitcoin was trading around 10K. So, it took it about 3 months, in fact, to go up 4x. That's a very substantial move. So let's just keep an eye on things. Again, this is the 20-day and the 21. So the 21-day SMA and the 21-day EMA, and we've already broken through the 20-day SMA. Now we're right at the 21-day EMA. If you're curious what the price is at the 21-day EMA, it's 34,538, which is basically right where we are right now. So hopefully this video has been informative. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up. Also check out the Telegram channel, which you can find a link to in the description below. We also have the premium list at intothecryptoverse.com. We have a lifetime sale going on for about 10 more days. So if you want access to the content, and you don't want to pay monthly, you can check out the lifetime deal, which will be going up in about 10 days. You can check that link in the description below. Otherwise, if you prefer the monthly subscription and you want access to the exclusive content, just check out intothecryptoverse.com. You get access to weekly reports, weekly videos, the Telegram alerts channel, the risk dashboard, a whole lot more, the trading view indicators. So make sure you guys check it out. And if you pay with crypto, you can get up to a 15% discount. That'll wrap it up for the video. I will remind you that in the event, if we do correct at some point over the next few weeks, remember that going down to the 20-week moving average does not mean the bull market's over, right? It's always if we hold it, then we're maintaining the integrity of the bull market, and we can, as we said before, sentiment can change on a dime, right? It can go right back up if we're able to hold that as support. So at that point, if we go back down to those levels, that would be, I would imagine, where the Bitcoin bulls would come out to hold the line. And we did so many hold the line live streams over 6 weeks when we tested it last time. If you guys were there for those live streams, leave a comment down in the description below. I'm sure we're going to have more of those this cycle. So again, if there's a correction down to that level, it's not really that big of a deal. Especially in the grand scheme of a full Bitcoin market cycle. Again, to maintain the integrity of the bull market, it's not a big deal. We just want to make sure we come out and hold the line, and if we do, great, market sentiment can change on a dime. And if we don't, then obviously we know what comes with that. We have even larger corrections, and then altcoins would capitulate even more. So those are the downside risks. Always be aware of them so that it helps you make smarter decisions in what you're doing. It's not about the return, it's about the risk-adjusted return, right? It's always about the risk-adjusted return. Hopefully Bitcoin trends higher, but we'll see what it does over the next few days. Make sure you guys subscribe. Let's go for 100,000 subscribers. Give the video a thumbs up. I'll see you guys next time. Bye.